show for entrepreneurs by entrepreneurs. Sit back, listen in, and prepare to grow together.
Let's get on with the show!
Welcome in, you guys, to another episode of the Growth, Grit, Grind podcast. I'm excited today because we have a guest with us. We went through a run of we had some guests and we didn't have some guests. And while I enjoy sitting on here and just giving you whatever knowledge I have in my head that particular week, it's always nice to have an outside perspective, an outside story. And so I'm excited to have. I'm gonna say Michael. And Michael, I'm gonna let you introduce yourself and tell me your last name because I am terrible at butchering last names and I don't want to butcher yours. So I want to introduce Michael, and I want Michael to introduce himself, tell us his official last name, and then tell us a little bit about what you do.
Well, I appreciate you having me, and thanks for the introduction there. So,
Absolutely.
My name is Mike Margarella. I'm the founder of Next Play Investments, and so essentially we operate a private equity company that focuses on acquiring commercial real estate, and we specifically focus on multifamily and self-storage, mainly in the Midwest. And I'm really excited to share a little bit about our journey here today with you and the listeners.
That is awesome. It's a space that I don't want to say I'm very familiar with, but I've seen a lot of things and learned a lot of things over the last few years about that space, and so I'm excited to hear more about y'all's take on it. But let's start, I guess, at the beginning. Was this your passion as, you know, a ninth and 10th grader in school, and we're like, man, I want to invest in, you know, self-storage units? And I mean, where did this kind of stem from, or what did maybe you do before, and kind of walk us through that of how you landed on this?
Yeah, sure. So I always joke actually that when you drive on the road and you see those storage buildings beside you, it never really resonated with me that actually somebody owns that until we started buying them. And then I started to understand it a bit more. So I can't say the answer to your question is yes. I will say growing up, you know, everybody always told me real estate's the best investment. You know, all the wealthier people own real estate. And again, there's varying degrees of truth to that. And you know, some of that stuck with me, some of it didn't, but I guess I always sort of had it in the back of my head. And so we started on a much smaller scale. We started doing smaller single family and small multifamily rentals in Indianapolis, some fix and flip properties. And there just wasn't enough scale there for us. There wasn't quite enough meat on the bone, and we weren't quite satisfied with the return on time that the income from those generated. So that's when we started to move into some of the larger assets, so multifamily and self-storage.
That's you know, you made kind of a joke there, and it's funny though, because I know some broke people in real estate, you know, like, but but I agree with you. I've heard the same thing being in the business world now for, I guess, you know, started in I don't know what you want to call it. Construction management is essentially what I was in. Let's just call it that. It was daycare and babysitting is what it really was. But you know, it was just, we saw that there's so many people in real estate that your wealthiest, you know, I don't want to say the 1% of the 1%, but a lot of them, they built their entire empire, their career on real estate. And so it's something that's always fascinated me, and I'm sure there's other entrepreneurs that as their business grows and they're looking for other places to invest or put their money into, real estate's always fascinated me. Not so much from the initial side you said, like I've never really had any interest in fixing and flipping houses or being a landlord per se, but being on the side of you know, those types of spaces, you know, multi-address or multi-revenue generating opportunities inside of one address. You know, like that's something that's always fascinated me. How did you land on that? I mean, did you have a mentor that was like, this is where you need to be? You need to be in the, you know, self-storage space, or how did you even land on that? How did you take that? I mean, what did that transition look like from we have these fix and flips to we're going to buy these, you know, storage unit properties?
Yeah, and you hit the nail on the head there. There's a lot of pitfalls that I think folks hit. So a common thing that I'll hear from some folks who maybe aren't real estate investors as their full-time gig, they're just doing it because they're accidental landlords or just as a hobby, and they'll think, hey, you know, the rent is $2,000 and my mortgage, taxes, and insurance is $1,500 per month, so I'm making $500 per month, and that couldn't be further from the truth, right? There's vacancy, capital expenditures, maintenance, all kinds of unexpected fees, possible eviction issues, holdovers, things like that. So I think that was a good point that you made, that the more successful people really treat this like a business more so than a hobby. And it's not so much that you're buying a property, it's more so that you're running a business that owns property. So so for us, kind of how we scaled into that from the smaller single family space was, again, we were looking for something with a little more scale. And so there's only so many different real estate asset classes that are out there. And multifamily and self-storage are certainly two of the more popular ones. You hear a lot about mobile home parks. There's, of course, the commercial hotel space, smaller motels, even mid-size Airbnbs is something that's becoming very popular. And so I think an important realization for me when I was making that shift was the amount of time I was spending on identifying the perfect market or the perfect asset class. And finally, when I narrowed it down to just a few, I thought to myself, it's time to just choose. And you just have to choose one or two and become really good at those one or two and really dive into that market and that asset class. And so that's how I picked. I narrowed it down to a few markets, a few asset classes, and I just had to make a decision and stop with the analysis paralysis. I think that's key really with any business, because once you devote all the time that you were spending on that analysis paralysis to the market or an asset class, things just start to snowball.
Yeah, I completely agree. I think that we have as entrepreneurs, business owners, we have that moment that is good initially where we pause and we go, let me think this through. Is this the right decision, wrong decision? But then we fall into that analysis paralysis 100%. Like we start second guessing the decision, or we see the squirrel and we go, oh wait, what about that? And we just overthink it. Like we make the process a lot more complicated than it really should be. When, I talk about sales a lot, in sales, when people say they want to think about it, thought is instantaneous. You knew immediately if you liked it, didn't like it, wanted to buy it, didn't want to buy it. And I think sometimes in business we forget that, is that I think we have to be analytical for sure and look at data and look at numbers and like, does it make sense? Does it not make sense? But then when we realize that this is the direction I want to go, it's got to be action. I think there has to be some action there. Otherwise you fall in the pitfall of, it's 6 months down the road, you're still in the same position that you were before.
Yeah, and really at the end of the day, there's no perfect market. There's no best asset class. There's good ones. There's probably worse ones. But really the best one is the one that you're really good at. And the one that you built your network in, the one that you built your connections in, and the folks who are going to help manage the properties on the ground. And so once you start focusing on that, then you could apply that to any business. I think that's when you really start to see the scale.
So you're saying people are important.
Oh, without a doubt.
I think we sometimes we lose track of that too. I mean, but I think for sure, people connections and, relationship are extremely important. Talk us through, obviously every single one of us for the most part, and maybe your story is different. Maybe you've got a rainbow and sunshine story, which I hope that you do. But if I know business well enough, then, usually there's a story that goes along. That's what, we always like to talk about just, from startup. I mean, if you want to back up a little bit to some of y'all's, fix and flips, which I think a lot of people could paint their own picture of what could have went wrong there. Sure. I mean, but if you want to kind of talk us through both of those, like from the time you guys started and you were working on the fix and flips into you started making that transition to, storage and things like that. What were the pitfalls in both of those and kind of how did you overcome it? What were if you had to pick one of the biggest challenges of each one of those, what were they and kind of how did you guys get around those?
It's really just leaning into uncomfortable things, uncomfortable parts of the business. And so with every new thing, there's just new challenges. There's things you haven't done before. And, like you said, how important people and connections are. And so working with contractors and setting up a fair payment schedule and fair expectations and timelines and things like that. I mean, there's always a first time for that, right? And that's challenging, and how to manage that process and not only the process, but how to build a connection out of that and how to ensure that if it's a person that you want to continue working with, that they want to continue working with you. So I'd say overall theme, just being all the uncomfortable things that come along with it and leaning into that. I think that's just, that's a challenge, right? In any business. And at the end of the day, there's going to be first for everything. And I think for us, it was just kind of leaning into that uncomfortable and doing the best we could with the knowledge that we had and building systems and processes based on the experiences we were having and being able to replicate that as best we can in the future.
Yeah, I think that it's important there. We learn, everything can be looked at as an uh-oh moment or a mistake moment, but I think the real answer and the most successful people that come out of those are they had a situation and they were able to build a SOP out of it or a white page out of it. And they were able to go, this was the hurdle that we came upon. And in reality, it was maybe our own fault. Maybe it was outside of our control, but going forward, we're going to make sure that we control it. We're going to figure out, here's how we solved it the first time and the headache that we had to endure the first time. And we're going to remember that forever. And we're going to ensure that that's not something we have to deal with again.
And then it's just not scary anymore, right? Once you've done it once or twice, and probably it wasn't as great the first time, but maybe the second time it was a success, or the third time it was a success. Once you do it the fourth and fifth time, it just becomes second nature, and it's just not a big deal. It's just part of the business.
Right. If you had to think back to, because I know this will fascinate some people, let's really try to either scare them off or get them really excited. If you had to think back to your fix and flip days, give me a nightmare scenario that you guys dealt with. I mean, and it could be gas leak. It could be, something fell through a roof. It could be, I want to give people the ones that, because I know there are people out there that think like exactly what you said. They think it sounds easy and they think they go, man, I could come in here. I know construction. I know remodeling. It's a perfect business. We could put 20 grand into this house, flip it, make 150 in 6 months. I mean, tell us, I'd love for them to hear one of those stories. Just, I don't want to necessarily scare people off, but I want also people to be prepared. I think people go in and get in over their heads, and then it hurts them. It hurts them, and their entire maybe life savings that they set back to go start their first fix and flip, they lost it because they just weren't prepared and didn't hear the right stories.
Yeah, so we've done quite a few fix and flips now. We still do them, maybe five or so a year, and we don't do them at the scale that you mentioned. They're much smaller, and they're not quite as big of an overhaul as maybe some of the things you'll see on HGTV. So we've had lots of issues, right? I mean, from hurricanes hitting a day after closing and wiping a roof off, to I have one now where a basement flooded while it's on the market because there's been very heavy rains in the Midwest. Um, I mean, we've been pretty fortunate in that there haven't been any catastrophic stories. And what I tell people is, I try to paint a worst case as I'm going into these projects. And I think that's a good baseline for newer investors to paint. And so for us, mainly where we're fix and flipping, it's in a market that we are very familiar with, real estate in general. And so if a fix and flip project just totally flops, we could turn that property into a rental property. And so that's when we're looking at a fix and flip project in the back of our head, we're thinking, if this doesn't sell for the price we need it to sell, or if one of these disastrous scenarios happens, can we turn it into a rental property? And that happened several times for us, especially in 2022, early 2023, when interest rates just went through the roof, and prices couldn't keep up with interest rates. So we weren't too far off on our after repair values, but our properties were just sitting on the market over the winter as rates were going up, and we weren't getting the showings that we needed, so we converted them into rentals. So I think that's something as a newer flipper to keep in mind, that you should always think of the worst case. What's your exit scenario, right? If your roof does get torn off, if there is a gas leak and you have to put some extra money into the project, can't profit on the sale of it, well, what can you do with it? Is it in a market where you could rent it? And if it's not, maybe do you want to rethink that market? Is it in a market where you have property management connections already lined up? Because it's a lot easier if you could just turn to a property manager and just fold it into an existing portfolio, or for a newer investor, fold it into an existing relationship. So that would be my best advice, because there's always going to be something unexpected that happens.
Yeah, without fail, right? And you said some key things there, and I think that just talking about worst case scenarios, when we have, from our smallest of clients, a local mom and pop shop, to a large corporation that calls us about marketing and advertising. We try to do our best, and not to scare them away, but we try to paint that worst case scenario. I mean, marketing and advertising is what it is. There's no guarantees in it. It's just like doing anything else. You buy a billboard, you wrap your car, you buy business cards. You don't know exactly what type of return that's going to bring you. You hope that by working with an expert that they're going to deliver you the results. But I like to paint that worst case scenario. If someone's calling us for Google ads or Facebook ads or video work or whatever it is, I like to say, look, worst case scenario, this is your likely outcome. Best case scenario, your phone's going to be ringing off the hook and you're going to have to hire people. I mean, that's your worst case scenario, but, or best case scenario, but, worst case scenario is that, you're going to get a ton of brand exposure. You're going to get a ton of, interaction, you get a ton of clicks over to your website, whatever the case may be. But I think that by doing that, it sets the precedent going forward, is that not only for you guys internally, is that you go, hey, we're okay with the worst possible case scenario, because at the end of the day, we have a strategy. But that was the second thing that you said. It wasn't just that there was a worst case scenario. You had a strategy for that worst case scenario. And I think that we see businesses fail, that I think they have their initial strategy, launch, scale, grow, but then something happens, and it could be a COVID scenario, it could be anything, but they didn't have a worst case scenario strategy. They didn't say, well, this is plan B or C or maybe F or G all the way down, but they didn't have that in place. And when it came time to execute something, they were just lost. They didn't know what to do, and they either just tossed their hands up and called it a day, or I don't know what they do in those situations, but you see that's where I feel like businesses fail a lot. Is there's multiple categories you see businesses fail, but that's just one of those, is not being prepared for a worst case scenario. And I mean, especially in this, you're walking into a house that you're projecting $5,000-$10,000, some little paint, little touch up, new doorknobs, but then you find out that there's a gas problem, or the wiring is not up to code, or it needs an entire new roof system that's 10, 15, maybe $20,000. If you walk into that situation and you went gung ho into purchasing the, bank owned property or whatever it is, like you're done. Like, you own a house that you can't fix, and it's just going to sit. And now you're essentially probably going to have to sell it back to the bank. Like, you're kind of lost in that scenario. So I think just having the foresight of knowing that it's not all sometimes sunshine and rainbows, that there has to be a thought process to it, and that there, maybe start small and maybe work your way up, similar to what you guys did, start with something that is, that you can chew, that you, if you're going to bite it off, that you can definitely chew, and that, that, again, worst case scenario, we're going to be okay. If we have to turn this into a rental property, we're okay with that, and it'll work.
Yeah. No, I think that's all true. And, it's never as easy as it looks. And if there's a bank owned property or a wholesale property, I mean, those properties are priced accordingly. And there's a specific group of people who specialize in purchasing those. And we usually don't hang in those arenas because we just don't have that specialization. And I'm realistic about that. And so, there's just a whole different level of analysis that goes into those properties. And I think that's another important thing. And that this goes with residential, fix and flip, commercial. Due diligence is just super important, and just understanding what needs to be done. And if you don't understand what needs to be done, if it's your first time, I mean, that's completely fine. Just surround yourself with people who do know.
Yeah, I agree completely. Again, go back to kind of the people and the network of the people you surround yourself with, that you've got that extra layer of protection or covering there, that they can help you navigate that situation. It's not always about having been there before. It's about, like you said, it's about having people around you that could possibly let you know that they have been there before, and surrounding yourself with the right people. What do you guys look for as you kind of pivoted, and you went towards, still doing some fix and flips, but really pivoted more towards like the commercial side? Are there any certain, and this is just, don't give away any secret sauce, right? Like, I mean, real estate's real estate, but every, organization has their own kind of thing that they look for. But what can you share with us as far as, when y'all are looking to make a new acquisition and you're shopping the market, or you're taking a look that's out there, are there any key metrics that you guys are looking for to ensure that, like, this really feels like a winner or should do well? Or are there any, some of them that you're actually looking at the negatives and you're going like, this negative for most people is what is going to make it our type of property? If you don't mind sharing just some of those, I'd be curious. And I think a lot of people would be curious to know just what KPIs are you guys looking for when you're looking at acquiring a property?
Yeah, I think that's a great question. And so AJ Osborne, he's, I'd say maybe the godfather of storage, or something of that nature. He uses the term the margin of stupidity. And I think that's a really good term. And that's something that I've really taken to heart. And so basically, when I'm looking at a new acquisition, we're thinking, what is our margin of stupidity here? So first, do we know the market? Do we have a property manager already in place in the market that we've worked with, that we're confident can perform, that we trust? Same thing with contractors and some other vendors, because that's really going to decrease some of the variables that go along with it. Next is financing relationships. What type of local banks and lenders do we know in this market? Are they going to give us competitive terms, especially nowadays? That's a really important factor, because banks are still a little spooked by everything that's going on in the economy. And so they're a little hesitant to work with brand new borrowers, even if they have a track record. So having those existing relationships in place, or again, a partner who has those existing relationships, is very important. So once we get past some of those threshold questions and we start looking at the numbers, things that we want to see just at a high level, we want to see a value add opportunity generally. So that's what we think leaves the meat on the bone for us and our partners in an acquisition. So that could be a physical or economic value add. So at times it's just a structure that needs some improvements, maybe cosmetic, maybe structural issues, things of that nature. Sometimes it's just economic issues. A lot of the sellers that we purchase properties from have been more mom and pop sellers who might own just a property or two, don't have professional management or systems and processes. And so maybe their rents are lagging behind what market rates are. Maybe some of the smaller little value adds are lacking. So just to give you an example in the self-storage space, tenant insurance, it's a win-win. It's basically a requirement by us as the operators that every tenant has insurance on their storage unit. And sometimes they could just add it to their homeowner's insurance policy, or they could just purchase a policy that's offered through a vendor, indirectly through us. And so that's like $10, $12 a month, of which $7 of that and change basically goes in our pocket, which is a really nice value add. It's a nice increase in income when you overlay that across hundreds of units. And for tenants, it gives them peace of mind. They're generally happy to do it. And it's little things like that on the economic front that I think could add a lot of value. So we'll look for opportunities like that. And just generally speaking, I mean, just to throw a number at you, I don't think this is foreign in the private equity industry, but we're looking for a 15% internal rate of return at a high level. And that's not necessarily going to mean a 15% return every single year. It could mean in year two, the return is smaller, but in years 6 through 10 or whenever we decide to sell, the return could be a lot more. And when you annualize that, it generally ends up in that mid-teens range.
Now that makes, and what do y'all have you said the kind of 6 to 10 range. I mean, is that usually from y'all side, from not just a commercial real estate investment, but from private equity side? Is that ideally is that the number that you guys look for? If we acquire this today and we put some improvements, we put some things in place, we're looking to make some type of exit 6 to 10 years down the road. Is that usually the number you guys are looking for?
That's a fair assessment. So our strategy is more or less to add value in the first year or two. Then we'll seek to refinance subject to market conditions. So we have a couple assets now that are ready to refinance, and we'll probably hold off for another 6 to 12 months and hopefully get a slightly better interest rate environment to refinance. We'll look to continue to cash flow those. Yeah, fingers crossed, because we're long-term passive investors. That's our long-term goals, not so much to fix and flip these properties over a 3-year period. And so we'll look to cash flow those for somewhere between 5 and 10 years. We'll take all the tax benefits we can, of course. And once we've taken advantage of a lot of those tax benefits and we've cash flowed the property sufficiently, if market conditions warrant, we'll certainly look to an exit. I will say we have one right now that we're lining up for a sale just because market conditions are warranting a sale. I mean, there's just so little supply on the market. The property is very well stabilized. It's one that we purchased at 30% occupancy, and now it's trending towards 90%. And we're just looking at the options between a refinance and a sale and what we think we could get taking it to market. And, we're going to end up selling it probably in about 3 years after acquisition, which is a lot quicker than what we usually target. But it's just one of those things where the market is dictating that we sell. So, I think it's going to be a good exit.
Yeah, I think that's one of those variables again that obviously you guys working through this and having the experience, you're able to navigate that. Like ideally you're going, 6 or 10 years, which I don't think anyone would say no to making money at 3 years, right? Like right. No one says, I don't want to do that.
Disappointed.
I just want to hold out and see what happens. Because it is that type of, from what I'm hearing on the real estate side, and I don't know about everywhere, but I know in a lot of places in Texas in particular is that, it's a mixed market right now, at least here is that you have pockets where, and it's really about inventory is what it's really about. That's why there's pockets, is that your nicest neighborhoods or nicest house in a neighborhood or good school districts, there's not much inventory. And that's, the residential side, of course. So, these homes are, I wouldn't say they're back at post-COVID or COVID conditions where people were getting, you're getting 19 offers and they're all, 50% over listing price or anything like that. But you're getting into a little bit of that because there's so little inventory that when a good one hits the market, it might be a couple of days and you're going to have probably multiple offers and maybe a little bit of a bidding war, maybe not quite what it was before. But again, the same thing, you're looking at your house versus an investment property is, I would be thinking the same thing. If the market's asking for my house, and that means it's probably going to demand a premium, or at least what I'm hoping for, then why would I hold out? Like, why would I take the risk on, what 6 years is going to show me down the road? And then at 6 years, probably more maintenance, more things I'm going to have to do, taxes, like all of that stuff that I've got to consider, that it's available right now. So that you guys have that experience to be able to watch that and go, we're at a great occupancy right now. we know that 3 more years from now, we're going to have to do X, Y, or Z to the property. And if you've already hit the tax incentives that make sense, then, and if the market again is asking for it, then sometimes you just go, here, market, you can have it. Like, now is the time for me to give it back to you.
Yeah, that's the exact calculus. And so I think that supply and demand factor is such an important point, and I think it's prevalent in both residential and commercial. I think you're exactly right about when good product hits the market, whether it's residential or commercial, there is so much competition. There is so much dry powder on the sidelines, and despite interest rates being what they are, there's just people who are looking for yield, and they're looking for it any way they could get it. And there's just so few offerings out there as compared to 2021 or 2022. And I think we have seen a bit of price softening as the rates have increased, but certainly not what we would come to expect looking at some historical trends. And it's just because of that supply and demand factor. And I think, there's a group of advocates who feel like prices will continue to level, and there's a group who think they won't. We're probably somewhere in the middle there. I don't think it's worth waiting on the sidelines. I mean, there are some folks who've been waiting on the sidelines since 2018, let's say, because they saw some of the same signals in the market. And, those folks may have missed the biggest run up in our lifetime in 2020 and 2021, which nobody would have ever guessed following a pandemic, but here we are. I just think the best time to buy real estate was yesterday, and the next best is tomorrow. So I think you just have to kind of sharpen your tools and go to bat with the knowledge that you have. And, just going back to the supply and demand factors, there's a few hundred new starts that are in the pipeline in the commercial industry, but after that, there's nothing. So, there's going to be some new product put online in the next year or two, which is going to add to the supply and so to the options that, let's say, renters have in the multifamily space. But following that, there's just nothing in the pipeline. And that's just because it's so expensive to build right now. Interest rates are so high on short-term debt that it just doesn't make sense for anybody to build. Not to mention, just dealing with municipalities is always a headache, getting permitting and things of that nature. So there's just not a whole lot of new starts in the pipeline that could impact supply and demand 3 to 5 years from now. So I think once we get past this push in the next year or two, I just don't see how prices aren't going to continue to rise, especially if rates actually drop in 2025 and in future years.
Yeah, I think that's going to be interesting to watch play, because I've heard the same thing, that there's a small run that's coming, but then after that, there's not. And it's sheer economics at that point. Like, for a builder, a developer, anyone to take on the short-term debt at the rates that they are, can they still make money? Yeah, probably, but not at the same rate and not at the operational side that they would normally need to be able to do it efficiently, effectively, quality basis, like all of those things. But it's going to be interesting to see. I think it really is. I think it's going to create, to me, it's going to create I wouldn't say a new market. I mean, there's been things like it before, but it's definitely going to create something newer than what we've experienced over the last 5 or 8 years, because it's just going to be different. And I agree with you. I think that I don't see how the demand would be higher than ever. So naturally, in my opinion, the prices will continue to climb as well. I don't disagree with you. I think that, regardless of what rates do, I think rates can affect it to a certain degree, but then people still are going to want to invest and buy property. People are still going to need homes. People got to live somewhere. So I think there will be something will give or break there, but it's going to be interesting to kind of see how it all kind of lines out. That's interesting, but that's good. I'm glad you kind of went there. I didn't know you're going to go there, and I kind of like that, because it gives a lot of people a food for thought. I mean, I like the forward thinking of, just hearing people in specific industries of what they're seeing and kind of their take on this. I think it's important that other people get to hear that too.
It's important to think about the future and, what a refinance, what a sale looks like, because at the end of the day, I mean, that's where a lion's share of the capital is earned. And so, when we're looking at the future, we're basically looking at a deal today. Let's say we want that deal to pencil out and make sense at today's rates in today's environment, and in the future, whether interest rates increase or decrease. If the deal makes sense today, to us, that's a good deal, because if rates go up, we're going to be happy that we locked in this lower rate today. If rates go down, we're going to be happy because we could likely refinance into a lower rate later. and hopefully we got a slightly better deal on the property that we purchased today. So at the end of the day, it has to make sense today. If it meets our metrics today, we of course have our thesis on the future, but I think we're going to be happy with purchasing things that make sense at today's market.
Yeah, no, I think that's a good way to look at it, and I think that's probably a business principle a lot of people could apply across the board. If the deal makes sense today, then more than likely you're going to be happy with it one way or the other. And I think that could be applied. I may start using that. I may have to steal that from you because I just like the way that we could apply that kind of across the board. But I like that. What would you say? A couple more things, and I don't want to keep you too much longer. I know you got a million things going on, but I definitely think people took some awesome stuff from this. But if you had to, I want you to share a couple of things with us. If for somebody out there thinking about getting in real estate, and we'll get to the advice piece here in a second, but someone thinking about getting into real estate, or maybe they've scratched their surface, they've tiptoed in the water a little bit. There's so many spaces, including mine in the marketing advertising space, but real estate as well. There's so many, and I'll say this with a grain of salt. There are so many gurus that are out there that want to sell a course or do this different things. And don't get me wrong, I know some of them are very legitimate. I follow a few of them. And I feel like they bring a whole lot of value beyond just maybe real estate, but just in general from business knowledge. But if you had to direct someone anywhere, and I don't know, maybe somewhere that you've learned or somebody you follow, a podcast you listen to, someone that wants to get into the real estate space, whether it be residential, commercial, do you have anything that comes to your mind that you would direct them to go get some of that information or that knowledge from?
So as far as just thinking about some of those paid courses, I think it's important to know yourself and know what you need. If you need maybe that structure and you need basically that calendar invite to show up at X time on X date, maybe that's a good thing for you. But I think just in today's day and age, with all the information that's out there, there's a whole lot of good free information. Just as a whole, I mean, Bigger Pockets is, of course, a great resource. They have information about residential and commercial. Depending on how granular a person's going to get, once they maybe pick an asset class, they could maybe get into some of the more multifamily or self-storage references that are out there. So I would start with Bigger Pockets. And from there, I would just start to make some phone calls, right? That's free too. And try to figure out which market you want to operate in. And from there, just call some property managers, call some realtors, call some brokers, call a contractor or two, take notes, and figure out who you mesh well with. And of course, you want to do your checks and balances and check their reviews, whether it's on Bigger Pockets or there's some really good Facebook groups in certain markets where investors congregate and chat about their experience. So I'd want to check all that with all those folks, but you're never going to know who you're going to work well with or how well they work with you until you actually start working with them. So I would just do all the due diligence you could now, right? Just start building your team, start building your systems and processes, and take advantage of some of the free time you have. Because once you start to snowball and own properties, then there's going to be other things that take up your headspace and your time. So start building all that out now.
Yeah, I think that's good stuff. I like to call it YouTube University, is what I like to call it. Now, I mean, and don't get me wrong, there's certain things that you can't learn there, right? Or there's misguided information or misconstrued information. But there's so much good stuff that's out there that, I'm not opposed to a course or something like that here and there, depending on what it is. I mean, some of what we do, teaching someone how to do a graphic design or teaching them how the fundamentals of Facebook works or, ads in particular. I mean, there's some of those things that you can learn, but there's a lot of bad strategy out there as well. So I think again, same thing I would suggest, even YouTube University route is find someone that you mesh well with, that you kind of feel like you speak the same language, that you're on the same page with them, you're after the same type of campaigns, but in the same space as you, same type of real estate you're wanting to go into, same mindset, maybe similar market, that you're able to glean and kind of take some things from. And whether that be you call it a digital mentor or whatever you want to call it, but I think that there's also something to be said about getting your hands dirty a little bit, and like you said, making a phone call, making the connections, getting involved. Maybe it's even being involved as a partner on a deal for your first, something along those lines, to where you're able to learn from someone else, where you've got a little skin in the game, but you're learning along the way. I think there's a lot to be said about that. Everyone, it feels like nowadays, wants that like instant kind of drive through success or reward. But the reality is like to go to build a generational type wealth or legacy, like it's generational for a reason. It doesn't happen overnight. You don't hop on the internet and make $1 million overnight, regardless of what some of the guys on TikTok may tell you. It just doesn't work that way. It's just, and it shouldn't, in my opinion. I mean, don't get me wrong. I don't hate on anybody that made a lot of money in a short period of time. More power to them. But I also think there's a level of humility that comes along the way of learning the path and learning and going through some of the obstacles and overcoming some of those and being better for it. And I don't know, I feel like we're better people and can help other people be better people from that experience. So that's awesome. That's good stuff. Before I let you go, I'd like to hear, I always like to end each of these episodes because I feel like just all of us, I don't care how old or young we are, we've walked a journey of entrepreneurship, and it is very much a journey, and I think that we all pick up things along the way and all of us have different perspectives. But I feel like we can all learn from each other. And so if you had to just summarize like your experience as an entrepreneur and as a, business leader, if you had to condense that all down into like one general piece of advice for someone that is interested in becoming an entrepreneur or is a business leader that maybe is struggling right now, what would that piece of advice look like?
Yeah, I mean, I mentioned it earlier. I think leaning into the uncomfortable, there's always going to be an uncomfortable side to progress. And the only way to get to progress is to just lean into that uncomfortable. So I'll give a bonus one too, just because I know I mentioned that one earlier, and it's just really take action. It's pretty cliche, but there's so many things that you could do regardless of what stage you're at. And, like I said earlier, just pick up the phone and start calling, maybe start calling some investors who have done it before for advice, or property managers or brokers, people on the ground, things like that. We use Monday.com for task management. And what I found to be really helpful for us was we built out basically a checklist when we acquire a new commercial asset. So here's, the 20 items, 25 items, let's say, of due diligence we'll do. Here's the 25 things we want to do the day after we close. And why not start building that out now? I mean, it just makes that process of acquiring a new property less fearful. And when it's less fearful, it's less uncomfortable. And when it's less uncomfortable, you're more likely to do it. And of course, that checklist isn't going to include everything that's going to be on there 2 years from now, because you're going to add to that over time. But why not just put pen to paper? Because that's just going to make it so much easier in your head. So just take action, do something to move the ball forward.
Yeah, both those things you said is, and I've heard it put a bunch of different ways. And, we've all heard the kind of diamond under pressure type, situation, or how diamonds create. But I've always related to, I enjoy working out. It's like my unplug. And I want to be somewhat healthy when I'm, 60 years old or 75 years old. And I've got kids that keep me on my toes. And, I like to try to stay fairly active. And, I've heard for the longest time relating it back to like gym and fitness is both the things you just said is like working out. It's not the greatest feeling in the moment. Like you leave and you're sore and you're sweaty and it's kind of gross and but that through that process, that soreness ultimately brings, muscle growth and a better body and a healthier body. But the same thing is like taking the action to go do those things now. It may be uncomfortable in the moment. It may not feel great in the moment. Maybe it's like, man, it's Monday morning. It's early. It's cold outside. It's hot outside, whatever it is. But ultimately like going through the process and taking action, it may be uncomfortable in the moment, but then the outcome on the back end of that becomes something that you were actually searching for and going towards. So great advice. I couldn't agree more. Action is probably one of my favorite words that ever gets brought up because again, you said it earlier, is I think a lot of people get lost in we want to think about it. We just want to think about it. We want to process it for way too long. And we miss opportunities. Same thing you said with the housing market of 21, 22. There were people that missed out, and that may come back around to them, but they missed a window because they were thinking about it. Yeah. And so, but Michael, man, I appreciate, this was an awesome episode. We haven't really had anybody, we had somebody kind of on the real estate, but mostly like the kind of flipping and remodel side. And so having someone that has pivoted from that and gone into commercial and some of the insight you brought, I just want to thank you for taking some time out of your day and your busy schedule of buying up every property up there. And, just say thanks for bringing some value to our audience. And I appreciate you being here, man.
I appreciate you having me. Thank you.
You got it. All right, you guys, this has been another episode. I hope if you're over on YouTube, give us a subscribe over there. If you're listening on audio, leave us a review, and we will see you guys next time. Thanks for tuning in.
Thank you for tuning in. If you're watching on YouTube, hit that subscribe button. If you're on audio, we'd love your follow. If you'd like to be a guest, hit up www.speakloudmedia.com/GGG podcast and fill out our guest form. Thanks again for tuning in.